Good morning, traders. Happy Monday to you. It's the 18th of May, 2015, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A couple of key news items from the overnight. Uh, Generally, the European markets are mixed. We have the DAX stronger today, Euro stocks lower, FTSE lower, the German Bund lower as well. Key element pushing this around is that the Greek Prime Minister Tsipras' letter to the IMF reveals precariousness of Greece's finances. The EU steps up pressure for structural reforms. There's a leaked IMF memo over the weekend suggesting that Greece will not be able to make their June 5th IMF payment unless an aid package is reached. Greece's yield continued to move higher in the session. Two-year government yield at above 23.7% yield, higher by almost 325 basis points. It's quite a move. Moderate movements in currencies overnight. The euro fell approximately 60 pips as news of Greeks hit desks. Gold hit fresh highs since the February 17th high. And then energy is stronger today as a ceasefire in Yemen ends with no further agreement being announced. And of course, a higher dollar helps push crude higher. So that's what's on the radar for this morning. There's still talk from various Fed speakers that there's a push for um, putting off interest rate hikes to the beginning of 2016, but the market, the Fed funds market is starting to price in a September rate hike. Looking at what's ahead today, not very much. We have NAHB Housing Market Index at 9 Central. The expectations for 56, and that's really it. The UK Parliament meets for the first time since the election today at 8:30 Central. But other than that, it's pretty clean. As far as what's on deck for the week, since it is Monday, tomorrow we're looking for the Reserve Bank of Australia's meeting minutes, the German zoo survey, European CPI, U.S. housing starts and building permits. Wednesday, we're looking for Japanese GDP, Bank of England minutes, U.S. Fed releases its minutes as well, and Fed's Evans comments. Thursday, Chinese HSBC manufacturing PMI. If you recall, back in January, this caused a big drop when it missed. Japanese and U.S. manufacturing PMI, Eurozone PMI, and services, or manufacturing and services PMI, ECB meeting minutes, and U.S. jobs report, existing home sales. So Thursday's pretty busy day, and then Friday is German GDP and IFO business climate. Those are key numbers for Germany. U.S. CPI, Canadian CPI, and the Japanese monetary policy statement on Friday. I want to remind everyone that Friday brings in a long weekend here in the U.S. Next Monday is Memorial Day. So the market, the pits are closed, cash is closed, and the electronic futures are open, of course, until noon Central on Monday. The futures will be opening on Sunday evening as usual, 5 Central exchange time. And so this week, this Friday, leads us into Memorial Day weekend, which is a big weekend in the U.S. Pools open, grills are fired up, and people are eager to get out of the office as quickly as they can. So just plan for that into Friday. Remember that for your trading. Also, for those who are trading energy, remember that crude has rolled to July 2015. We're trading the July 2015 contract. The price right now is $60.78. Let's switch gears and look at what we did uh, on Friday versus what was expected. On Friday, for those who attended the Trader Bite, the expectation was for the high to be taken out, the overnight high to be taken out, given the shape of the profile, the overnight profile. Let's look at that real quick. So here we have an overnight profile that had a very weak high, skewed to the upside. The market was pulling down below as the trader bite was done, and the expectation was for the market to push through that high test and then fall back in. It did not quite push into the high. It broke the low. It just continued the trend that it was on. But overall, the plan was for a return into the point of control right here at 16 and a quarter. So the initial test, this was an open rejection reverse type open. The initial test was for the VPOC as expected, missed it by a tick. The VPOC's at 16 quarter. The first test was at 16 half. Bounced back up towards the open, and then it pushed through. Our target below was 21.11 quarter. We had a nice continuation move a little bit later, a half hour into the session, but from that point forward, it was pretty dead, pretty quiet, very sluggish trade, and overall did not accomplish much of anything other than balance at the prior day's point of control. Friday's trading was balanced against Thursday's, giving us a pretty interesting shape to look at. So for today, I have created a new micro composite. We were in balance for 2 days, then we dropped, we came back, we were in balance for 2 days down here. And then we pushed through higher on Thursday, and we were in balance for 2 days. So this is an MC. These 2 days make up an MC. These 2 days make up an MC. But if you look at the whole thing, we still have 2110 as the key area, the key price in this area, price of attraction. The low overnight was just below the LVN on the micro composite. So today, and for the next couple of days, this micro composite is going to be very important to see what the market's doing with these really high balance areas against all-time highs. And so that's what I'm watching out for. This is what's going to tell us the clearest story. But as we move from one area to the next, so here we look at, let's color this different. So as we look at this green profile here, we can see where we are versus where we've been Thursday and Friday on these two balance days. Right now, the S&P is trading 2116 and a quarter, which is right against this point of control, this area's point of control. Once we move out of this area and through this MCLVN, then our target becomes 2110, the next and the most important price in this zone here. We expect it to chop around, and if it drops, then we expect it to drop down into the 2103, 2102 area, the next MCLVN, and if it makes it through, then we expect it back at the next MCVPOC, which is at 94 and a half. That's the sequence for the auction. So the question is, what I'm doing here is not predicting what it's going to do, whether or not it'll drop. That's not the goal. The goal here, although I'd love to know that ahead of time, the The goal here is to see how it treats these areas that it has accepted. So your key prices are 21.15.50. We're trading right around it right now, 21.14.75. The next price down, 21.10. The next price down, 94.50, with the 21.10 and 94.50 giving us the most room. The best opportunity for day traders, short-term traders, is for this to roll over and start breaching through the 21.10. It creates a nice rotation distance to the next MCHVN that we're likely to test. Now, the market has traditionally, over the last couple of years, made new highs and pulled back within 1 or 2 days. I don't know if it'll do that. We made the new highs on Friday. We did not push those highs very much. I think it was 1925 before, and now we're at 2050, I believe. 2050 being the all-time high now. So as we've made a lot of effort to come back all the way up here, but haven't pushed that high very much in general. We've been pushing the high by about 9 to 11 points on average. A quick look at the monthly MP market profile chart. So we've looked at this chart quite a bit. We talked about 2083 and a quarter down here being important. If you recall, it's an important area to battle. But let's zoom in and look at where we are overall. Right now, we're trading against this POC, or the HVN that's in this area, the high volume node. This is the highest volume node right here. We saw it earlier in the microcomposites that I just drew. This would be the green microcomposite, but this is what I'm talking about. As long as the market holds these prices, it's likely to rotate around here until a decision is made to move one way or the other. The key element that we need to remember is if it breaks through the low volume node, 2113.50, then we can start targeting 2110. Expect it to chop around here. This is the point of control here, 2110 so far this month. And if it breaks through the 2110, then we expect it to test 2103. Again, I'm just regurgitating the levels, but this is using market profiles as opposed to volume profile. Recall, market profile is built on 30-minute meaning time, time slots, versus volume, which is built on tick data, tick and 1 minute data, and telling us how many contracts actually traded. I prefer volume profiling, but market profile is something that I grew up on as a trader, and it gives a little bit of a simpler picture than volume profile, since volume tends to create these protrusions here that are hard to read. But it's very clear. It's rare that we see profiles that are so clear as to where acceptance and rejection has been. And so we have acceptance here at 2115.50, rejection around 2113.50, acceptance at 2110, rejection around 2103, and then acceptance again at 2094 being the big area down below. So as the market trades through these prices, I'll be gunning for the next area. I'll be looking for it to start giving me a sign that it's breaking away from one acceptance area and moving to the next. And as it moves to the next, those are the real good trades. Those are the trades that take a while, but have a runner in them. So the plan for today, since we are opening right up against this key high volume area, today I'm just gonna sit around and wait for a break one way or the other. We do not have much news. We don't have much of a catalyst. I don't know what happens with Greece here, but there's not much to drive this market. Friday was interesting in that it had all the makings of a market that's likely to push lower, but it just did not. It could not push lower, and we ended up with a delta that was fairly strong on the close, delta being negative all day. So there were many more aggressive sell orders versus buy orders. Many more traded at the bid, meaning sellers, versus at the offer, meaning buyers, until the end of the day. And it just ran up the expectation. Given the shape of the profile, the way it put in these bottoms, the expectation was for it to actually continue and attain its hypo 1 target of 21, 11 and a quarter or so. It could not do that. Now today we're gapping down a little bit, but we're gapping right into value and right into the point of control. What does that mean to us? Chop. Chop, 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 chop. The market is not able to price anything new in and is holding on to the prices that it has accepted on Friday and Thursday. So there's not much to do. You look at the overnight session, completely Gaussian here, bell-shaped curve with value right in the middle of that curve, just like you would see in a statistics book. It's not telling us much. It's telling us the market is coiling and is in balance. The beauty about the market being in balance is that it means that it's building energy for a break one way or the other. And there's a habit in the ES to do so after a certain amount of balance, a certain period of balance. The bad news with balance is that it's choppy, it's short-term traders. You have to widen your stops, you have to be light on your trades, and just trade from the outside in towards value until the market breaks. And it just costs you something when the market breaks, but at least if you're ready for it, balance leads to imbalance. You can find a spot to catch the break and catch a runner, hopefully. But right now, overall, the market has taken out the high of Friday and the all-time high by a tick overnight, and it's taken out Friday's low by a point and is opening in the middle. I suggest you just relax this morning, let it figure out what it wants to do, let it play out the market on open orders, and let's see who's dominant. Then we step in. I don't have one hypothesis that is better than the other. I am more, if I was to gun to my head and I had to pick, I would say the market is likely to take a downward skew from here towards 2110, more so than an upward skew towards 2120.50, the all-time high. But on the open, it's pretty much a coin toss this morning, 50-50 on a fair coin. And there's no edge on the open, so it's strongly recommended that you chill out and let the market sort out what it wants to do, and then find your spot to trade against. That's all I have for you. I'm not going to cover any other markets. There's not very much to talk about, and I've already used up most of my time. Good luck to you. Again, risk comes first. Without risk control, without managing what you're staking per trade, you're just a gambler. Don't be a gambler. Somebody else will take your money. Good luck. Take care.